If you're a budding investor or just a big fan of takeout, you might have heard about Deliveroo's plans to go public on the London Stock Exchange. So while you ponder what to order for dinner, I'm going to explain exactly what's going on and how you can get involved, all in the time it takes for my own Deliveroo order to arrive. Now, is it a Mackey's kind of day or sushi? I'm kidding, it's always a sushi kind of day. Okay, so my order is on the way. Let's start with the headlines. After much hype and anticipation, Deliveroo has launched its initial public offering, or IPO. An IPO is when a private company lists its shares on the stock market for public investors to buy for the first time. Deliveroo is listing its shares on the London Stock Exchange under the banner Roo Foods and plans to raise a whopping £1 billion. Although initial figures suggest they could end up making up to $8.8 billion from the IPO. Remarkably, yes. Typically, when a company launches an IPO, the shares are only initially available to institutional or high net worth investors. So the likes of you and me wouldn't get a look in until they do a sort of secondary launch. It's like inviting all the rich kids to your party first and then padding out the guest list with everyone else. Deliveroo, however, are intentionally reserving £50 million worth of shares for its customers, restaurants and riders. To get a side of stocks and shares with your next chicken booner, simply log into the app and click the IPO banner. Preference will be given to people with a pre-existing Deliveroo account, and you'll only be able to buy a maximum of £1,000 worth of shares per person. You have to be a Deliveroo account holder to participate in the IPO. If you haven't already, register your interest by clicking on the IPO banner in the Deliveroo app. This does not commit you to actually buying any shares. If you don't already have a broker or share trading platform, you'll need to open one. You'll also need to sign up for Primary Bid, the company that Deliveroo is running its IPO through. Check in advance that you can connect your brokerage account with them through your broker or your trading app. Once registered, you'll be able to read the prospectus, which details in-depth information about the IPO, and apply for £250 to £1,000 worth of shares. Make sure you thoroughly read the prospectus before deciding to invest. The window to apply for shares closes on the 30th of March, and on the 31st you'll be told whether your applications were successful and official prices will be confirmed. As it stands, the offer has been set at £3.90 to £4.60 a share. From the 7th of April, unconditional dealings start on the London Stock Exchange, and you'll be able to start trading your shares if you so wish. Deliveroo is a food delivery company founded in 2013 by Will Shu. Deliveroo serves a total of 6 million customers with over 115,000 partner restaurants across 12 countries. In January 2021, Deliveroo secured $132 million in private funding, putting its value at over £5 billion. Deliveroo's gross transactional value increased by 64.3% in 2020. However, Deliveroo is still technically making a loss. But a huge investment from Amazon last year, which gave the giant a 16% stake in Deliveroo, gave it some valuable support. Believe it or not, investing is even riskier than trying out a new takeout spot with no reviews. So make sure you do your research and consider all of your options before making any final decisions. For the latest information on the Deliveroo IPO and other exciting launches, head to finder.com. Links are in the description below. Now, if you'll excuse me, I have a little bit of sushi to attend to.